Chapter 3, Adjusting Entries. Before you proceed to Chapter 3, be sure your General Ledger trial balance from Chapter 2 check figures are correct. To check that, go to Reports and Forms tab, click General Ledger, double-click the General Ledger trial balance, and on Options, on Date, choose Specific Date, and locate your December 31 of last year date. Click OK at the bottom of the screen. Verify that the individual account balances matches the check figure shown at the end of Chapter 2. Now you can proceed to Chapter 3. In this chapter, you will record A to H adjusting entries using the information given in the computer problem 3-2. You can close off of these screens and start. The purpose of this chapter is to bring the account balances of the affected accounts to a current balance because of the lapse of time. Note that adjusting entries are not correcting entries. All your adjusting entries will be dated December 31 of last year. Remember, you had been recording your transactions in the beginning of the year in January, and now at the end of the year, December 31, some of the account balances are no longer current. Therefore, you will need to prepare adjusting entries before closing your books. The accounts affected are an income statement and a balance sheet account. If these accounts are not adjusted, your financial statements will not project the true picture of what really had transpired in the operations of the business for that particular accounting year. The chapter discussions show the different adjustments to be made as of December 31. I will illustrate the first adjustment A as an example. Since the process is journalizing the adjusting entries, go to the Task tab and click the General Journal entry. On the Date cell, be sure you select December 31 of last year date. Under the reference, use the letter reference A for this example. Let us analyze the information given. The medical equipment has an estimated useful life of 5 years and an estimated residual value of $2,000. Consider 30 days worth of depreciation. It gave you a check figure of $666.67. How it was arrived at is by using the straight line formula for depreciation. Referring to the General Ledger trial balance, the medical equipment account has a cost of $42,000. Applying the straight line depreciation formula, take your cost of $42,000 minus the estimated residual value of $2,000 and divide it by 5 years, representing the life of the asset. The amount you get is $8,000. This amount represents the whole year's worth of depreciation on the asset. Therefore, since you are to consider only 1 month's worth of depreciation, if you divide 8,000 by 12, you arrive at $666.67. Let us now record the first adjusting entry. The debit is to the depreciation expense account, medical equipment, and your description is year-end adjusting entry. Under your debit amount, enter $666.67. Your credit is to the accumulated depreciation medical equipment for $666.67. This account is a contra account or a valuation account to the medical equipment account. Therefore, the accounts affected are the depreciation expense account, medical equipment, which is an expense account and found in the income statement. The other account affected is the accumulated depreciation account, medical equipment, which is a contra to the asset account and is found in the balance sheet. You can observe that if this adjusting entry was not recorded, the income statement will be overstated because you are missing an expense account, and the total assets in the balance sheet will also be overstated because you have failed to record the contra asset account, which is a subtraction to the medical equipment account. Be sure to save this entry to complete the posting process before you go to the next adjusting entry, letter B. Refer to the chapter discussion and illustrations to complete all the adjusting entries required. Then verify the general ledger trial balance with the check figures shown at the end of this chapter. Once you are in balance, do not forget to run a backup Peachtree backup of your company PTB in an external drive and label it Chapter 3.